In the last few minutes of the market, we detected unusual trades on Mobileye stock, ticker symbol MBLY. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish or bearish, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, sometimes leaked insider information, to make better financial decisions. Now, if you're not familiar with Mobileye Global, this company develops autonomous driving technologies to make self-driving cars possible one day. So, without further ado, let's dive into the data as usual. As you can see here, the last few minutes of the market, 3:43 p.m., 3:42, 3:44, 3:47, 3:45 p.m. All of these August 16 options being traded for the 30 strike calls and the 40 strike calls. And we have multiple trades happening, different quantities. So let's take a look at the chain to find out in total how many were actually being traded. So we can see for the August 16 options, there was a total volume of 6,538 contracts at the 30 strike calls. And for the 40 strike calls, there was a total volume of 4,328 contracts. Both options were clearly opening trades, since the open interest was much less. And notice that at the 35 strike calls, there was also 5,000 contracts that were also being opened. And that's actually one of the strike prices that we traded here with our position over here, where we sold the 35 strike calls and we bought the 30 strike calls. Okay, so this was our strategy based on this data, where we bought the 30 strike calls and we sold the 35 strike calls. And so when we analyze this trade, you can see that this is known as a vertical call spread right over here. Each trade costs about $103. And so as the price of mobile stock goes up, this trade strategy becomes profitable. Okay, because the x-axis here is the share price of Mobileye stock, and the y-axis is the profit. This is the zero break-even line. If the purple or blue line is below that zero, it is a loss. And so you can see as we move on the share price on the x-axis, you can see this negative, that's a loss. If the share price goes down, if it goes up, it is a gain. And so the blue line is our max profit, which is shown right over here. That is $397 of max profit. So we have a very favorable risk to reward ratio here, because $397 is our max profit, divided by our cost of 103 times 100 for a percentage, means we could potentially make 385% profit on this trade. So this is why we wanted to trade with this strategy, because we always want to make sure that we can make more than what we could lose. Okay, so the reward has to always be greater than our risk. And so if you want to learn more about our strategies or gain access to the stocks that have a higher chance of profit, not like this one, because this one is actually a lower chance of profit based on the data, because it does not meet some of our thresholds, our criteria. For example, this is not $1 million trade. The ones that we share on our website, we'll put a link at the top here, those are more than $1 million. Those wealthy investors have a lot more capital on the line, a lot more skin in the game. And so those are higher chance of profit. Let us know in the comments below, what do you think will happen to Mobileye stock? Do you think it will start self-driving up, or will it crash? Please smash the like button. Take care and have a great day.